Hey, good morning, everybody. Thank you for joining. I'm always grateful when you guys dial in, and as always, we're gonna record this live so you guys can watch it later, and those that can't join live can join in. I'll just go ahead and get started. I think we're gonna be out of here in less than 20 minutes today, but I promise we won't go deeper than that. All right. So there's not a whole lot of news flow that's out there this morning, but I want to stay focused on these balance sheets, and I want to go through a couple of charts that Kansas State has on their Ag Manager website with you this morning because I think it helps put in context what our risk is, and that's what we're really looking for is what could happen that exposes the risk and ultimately could make the market move. And when we understand what could happen, then we can prepare for it and plan for it. So first of all, this is your corn balance sheet, right? This is the neutral case that I have. This is taken straight from the USDA's crop reports. So the number we are working with today is roughly 2.6 billion bushel corn carryout. So everything that we talk about, whether it's bullish or bearish, all we're talking about is how much does this number move? How far do we vary from this number? Because the further we vary, the more impact we have on price. Okay, so what I want to show you is, and we're going to come back to this sheet here in just a second. What I want to show you are two charts taken straight from Kansas State's Ag Manager. If you go to agmanager.info, you can pull these charts up too. Excellent resources, excellent tools. I highly recommend everybody take a visit there from time to time because they've got great stuff. Okay, here's the point of this chart. The USDA is already building in all-time record usage, which includes exports for soybeans. Now, I don't think that that's a shock. I don't think that blows anybody away. But here's the point. We have to hit an all-time record usage or our carryout gets worse. So what's going on in the world that could prevent an all-time record usage from happening? Well, look at what we've got. We've got COVID, and we've got an election, and we've got, at best, you can call them stressed relationships with China, right? Now, China, I read this morning, China is going to buy 94 million tons of soybeans next year. That's a little over 3 billion bushels of soybeans. So let's just pretend for a second that China fails to buy, well, let me take one step further. So they're going to buy 3 billion bushels, of which they're going to import an awful lot of that. They're also going to buy a lot from South America, and South America is going to plant more of them as they go. So with soybeans, let's just pretend, and again, this is your carryout number. We're looking for what's going to cause it to vary between these two things. So if we have a yield, and this is where a lot of the models from FC Stone to AccuWeather, they're all predicting yield above where the USDA has it. If it hits 51.3 and they hit their all-time record buying, we have a larger carryout. And I don't think that a 517 million bushel carryout necessarily holds this price level. We could easily see some lower price action from there. But what if China misses by 5 million metric tons? That's roughly 175 million bushels. Now we're talking a 700 million bushel bean carryout if this yield goes. So when you see China flash sales announcements and export news talking about China sales and the market doesn't react to it, we just finished a 10-day stretch where China bought every day for 10 days and the market didn't react. When you see that happening, it's telling us something. And on top of that, the market didn't react to a lower dollar either. So we've had strong exports and we've had a lower dollar, which tells us probably that the market is pricing in a much higher yield. But what if China doesn't buy? So the risk is down. Now, to the flip side, what can happen to cause this number to shrink? Well, we're already dependent on an all-time record usage in order to have this carry out. The idea that this number is going to get beat and China is going to buy so many beans that we're going to push prices higher, I think that argument is not very compelling when you realize that what we're really dealing with much higher yield. Because if I change this number from 47, which is a 2.8 bushel an acre decrease against the USDA, if I change it back to the USDA numbers, right, now we're significantly higher. So our hope for lower carryout on beans because of China buying, I think, is dwindling. I think the question is just how much bigger does it actually get? Does it really take over and go much higher? And really the same thing for corn. But with corn, I want to point out one thing there. So corn, we're estimating a 178.5 yield, and I thought this was really interesting coming from K-State, where their trend line is a little different than some of the other trend lines that I've seen. Most trend lines that I've looked at have showed our trend line yield right at 178.5, and they've got it plotted a little bit differently. And I think that's interesting. I don't know why it's plotted a little differently. I don't know what the numbers are, so I don't pretend to know. But if this is an accurate trend line, and our weather starts to, or our good to excellent ratings are accurate, then what if we hit it and we actually yield in this 183 to 185 level? Well, if we do that, our corn balance sheet gets really ugly really fast. So there's a 3.2 billion bushel corn carryout with the USDA's usage numbers, which are basically at an all-time high. Now, how at risk are we on the corn balance sheet for demand? I would argue very at risk because of ethanol. If we shut this country down again, or we just don't reopen and we just don't get the economic activity that we want coming into the fall, then this number is in jeopardy of lowering, which could raise this one. So if we go back to what I think is kind of the median prediction, we're looking for the corn carryout to expand. Now let's look at the charts and see what they're telling us. So this is soybeans, right? This is November beans. We had 10 days in a row. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days in a row of flash sales coming from China, and it didn't propel that market higher at all. So, and the dollar also collapsed during this time period. So what happened? Why? Well, I think the reason is the weather's just so darn good, we're growing more crop. So beans literally, or China literally has to outgrow our increase in production, or we're going to head lower. So at this point, this was a big, nasty down day yesterday. Clearly a move below yesterday's low at 82 is bearish and should accelerate a move lower down into this 870 level. And honestly, from a technical standpoint, it should go below that, because look at all of this support that we're going to blow through. This 880 level, 884 level has been solid support for a long time, and we finally broke above it, and now we're going to fail to hold it if we trade lower. So that would be a very bearish development and probably would accelerate a move down to this 850 level, possibly lower, if unless something happens. So I think that the contract low in beans is in play off of this setup. Absolutely does not have to get there, does not have to do that. But the reason that it could is that the yield is just getting so big, a lower dollar and great export sales aren't helping us. So now let's take a look at corn. Um, well, one thing through there. If we hold support like we did yesterday and can really hold it for a few more days, then that's a good sign. Then maybe we can come back and challenge this high. But if this stuff starts to fall, and definitely if this 872 level falls, then I think beans are in real trouble, and could get really ugly. They also, or the funds, they also were caught very, very long right here. According to the CBOT, they were holding a net long position last Tuesday of roughly 70,000 contracts. We think that got significantly longer, possibly out to 100,000 contracts, and they are long and wrong if those two things don't happen. If we don't have great buying and lower yield, so that we could get some extreme selling pressure here if they liquidate their position. So beans are vulnerable. Corn, oh, there it is. Okay, so what's happening in the corn market? This is a really funky chart pattern, and very, very difficult to trade. But let's just break it down, right? So lower lows and lower highs are downtrends. Higher highs and higher lows are uptrends. That's the foundation of all trading and all technical analysis. Very simple. What we have here is a giant waste of time as we've bided time waiting for this crop to come through. From mid-April, we have done nothing. We have been completely sideways, and we've traded basically 15 cents either side of 330. So what we've done during this period of time is all we had was a counter trend rally off in the series context of here. So you have a lower low and you have a lower high if you look at it from this broader perspective. We hoped that this would be the beginning of a new uptrend and you would have higher high. We hoped that this low would hold and you would get a higher low, and then we could rally back and challenge the upper level here and possibly even get a higher high, right? Yesterday was a really bad day for that argument. Get my crosshairs up here. Yesterday was a really bad day for that argument because by taking out these lows, you now have a lower low, a lower high, followed by a lower low. So you've now got a new downtrend that could be unfolding and certainly putting the contract low at 320 in play. And again, this has happened in the face of a lower dollar and great exports. So the idea that China is going to buy our way out of lower corn prices, I think, is flailing. And the technical setup certainly tells us that. Now, hope is not all lost here. You see this tremendous amount of support all the way back, right? So, but this 325 to 320 level falls, and we can hold a close below this 321 level, then I think corn's in real trouble, and we're going to price in a bigger carryout, and we're gonna see where the bottom goes. Now, the good news is that that's probably the beginning of the end, right? If we get a break of this level and we get a washout, then ultimately that trend will come to an end, and we'll be able to build a floor or a base, and then maybe start to work higher. So remember, the trend is your friend until the end when it bends. And right now, this trend is starting to look weaker and worse in the face of what should be pretty bullish catalysts, and we're just not getting it. So if we don't turn around quickly, I definitely expect lower corn prices to come. So be protected. All right, wheat. Wheat is all over the place, and it's like up 20, down 20, up 20, down 20, and it's just getting banged around like crazy. But wheat is arguably the most sensitive of the grains to currency fluctuations. Its correlation is very, very high. And during this whole period where we've getting banged around, the dollar has lost almost 7% of its value. And wheat has not responded to that lower dollar. So something is going on here with wheat as well that isn't making any sense. And so I think that the prudent thing to do is just sit back and give it some room. When a market is behaving opposite the way you think it should, the best thing to do is give it room, give it space, and let it kind of materialize what needs to happen. It could be trading off of corn. It could be trading off of some other type of fundamental. But definitely anything between, I would say 360 or 460, 465 and on the September Kansas City wheat contract is bearish, and you want to be trading to the short side or hedged anywhere below there. If the dollar keeps working and we start working higher and that correlation comes back into play, then maybe wheat will find a floor and start to rally. But for now, we've got this counterintuitive situation going on in all three grains, where the dollar should be giving us support and it isn't. That's got to change, or I think we're heading lower across the board potentially. So you're welcome for the great news. I know everyone is super excited to hear all that, but I think we just got to call it as we see it, and protect ourselves accordingly. So if you have any questions, please don't hesitate to give me a call. I'm happy to be helpful and help you get positioned where you need to be. And we will talk to you next week. Have a great day.